Welcome to Trading Lounge and the Asian report for the 4th of December, starting with the ASX on the daily chart here. I'm looking at this particular pattern here on the daily chart as an A wave here, then an A and a B and a C wave here for the B wave, and then a C wave down through here for wave 4. We've taken the top out here, so we can call this particular pattern here an expanded flat. If that's the case, we should just take out this little low down through here. The reason that I'm looking at it like this particular pattern here is because when I look at some of the other sectors, such as the materials sector, which is the in this case here the XMD, so in this case here we can see that the sharp move down through here, and then we've got a 5-wave sequence here, and then a corrective move here, and then another 5 waves up here. It is possible that this could maintain support here and continue to move up through here as well. But with the look and feel of the US and European markets, is that we would come down further. So in this instance here, it's pretty much the same sort of pattern that we're looking at. So it is possible, I guess, this move up here we can count in 5 waves, and this move's a corrective, and this move here we can count in 5 waves as well. So we wouldn't want to see it coming any lower than this, you know. If it came down even a bit lower to the medium level here, the 6,500, then you know, we will be on the right track. But so it is possible, you know, I'm just saying it is possible for the market to, you know, to move up from here and make new highs. But taking everything on board, it does look like that we'll be coming down further. So this move down through here, we'll be looking at 5 waves. But just before we get there as well, we looked at the mining sector. I think we should just take a quick look at the finance sector or the banking sector. The banking sector is something that we trade a little bit more. So in this scenario here, if we simply start with this move to here, the 61.8% is further down here at 6,400. So we can expect that this is moving down nicely here. We've gone over this banking sector before, and we know that you know, the ANZ and WBC and some of those guys are all moving down. So we can look at this here, even if we looked at this as an A wave, a B wave, and a C wave down through here, we're not finished with this here either. So this C wave would be in 5 waves, so wave 1 and 2 here, and then we're coming down for wave 3 here, and then we'll be wave 4, and then we'll be down for wave 5 here. So we're not finished this sequence in the banking sector, the finance sector, and the mining sector also looks in the same boat as well. So obviously that's going to be dragging down the ASX as well. So our job really is to try and figure out, you know, this particular move to the downside here. So that's what we're going to do today. So starting with the 4-hour chart here, I don't think I've got that labeled, but we were expecting support in this area through here. That's just simply the come back to the daily chart here. That's simply the 50-60% retracement level from this low to this high here. But also too, if you've got a keen eye, you can see that this particular number here carries a little bit of weight. So it's the halfway, this is a medium level here, 6,500, it's halfway between 2 major trading levels, 8,000, 5,000, and then the next level up here is the minor level 8 here. So this level here is simply 50% between those 2 levels, so it always carries a bit of weight. So the 4-hour chart doesn't really give us the count, so we're going to go into the 1-hour chart and start to pick this up through here. So from the top up here, we're looking for 5 waves down. So in this case, we've got 1 and 2 here, and we're looking for the 3rd wave down. In fact, I've got that counted wrongly here. I've just made an adjustment here. Just bear with me a second. Apologies about that. So this will be the wave 4 here. We're looking at this as wave 1, and I'll show you the reason why in a moment, and wave 2 here. So in a bit of a nutshell, we're looking for a move up into this space here to the 38.2% retracement level, then wave 5 down, then an A and a B and a C, pretty much a bounce off the medium level here, 6.5. Wave 4 will pull back to the wave 4 of 1 lesser degree. Even this wave 4 is pulling back to the wave 4 of 1 lesser degree, which we'll also check out as well. And then another 5-wave sequence to the downside here. For this, and then once that's completed, we should be pretty much at a low there, and this should be in line with the S&P 500 finishing its ABC correction as well. So I've tried to tie it into that, taking that into consideration. So if we go to the tick chart here and just have a closer look for this here, first of all, this little move up here, I'm looking for it to move to 38.2% retracement level and the wave 4 of 1 lesser degree. So we're going to be testing the 665 area through here before we see a move down. So the short covering after that move overnight will peter out at this particular point, and then we'll see this next structure down moving here on the open of the cash market. So yes, from the top here, we've got wave 1, an A and a B and a C for wave 2, then wave 1 and 2 here, and then 3 and 4 and 5 for wave 1 and 2 here, and then simply down for the third wave. Now, if I've made a mistake, I always look at where I always try to find my mistakes, and the mistake would be that this move down through here be wave 1 and 2 and 3 and 4 and wave 5 here. So this is why I've got this wave 5 here. So it's possible that I have wave 5 here. So in one way, what we could do here is that if this top of wave 4 here, this blue wave 4 here, becomes the support, then we could be looking at a move higher from that point. So what I'll be suggesting here is that we'll just take it one notch a little bit higher. So in this space here, we've got group 2 here, 65, 72 and 80, so subgroup 2. So if the 72 here, the 6672 becomes the support here, a tested support, then you can get a small position in here on that support and then just hold it and then wait for 6.7 to become the tested support. And you know how the support works, so it will be the arrival, the reaction, the first high above the level, some type of ABC correction, and then support on here again, and then you go along at that point there and up from that point. That's what you'll be looking for on the 72, and that's what you'll be looking for on the 6,700 area. That way we've got it covered, we've got that upside covered. At least I know at that point we would be wrong at that point. I don't need to go to the 20 tick chart to elaborate further on that, but yeah, so this is sort of where we are here, moving up into this space, another 5-wave move down into this space, and then wave 4 here. This wave 4 here will also pull back to these other wave 4s here, this one, and this one here roughly in here. So that's what we'd be looking for there. Alrighty, moving on to Hong Kong. So with Hong Kong here, I'll just stay on the hourly chart here. We're short here and here. We've kept the stop out of the way, but what we're looking for here is wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for 3 and then 4 and then 5. So there may be another little move down on this, but our idea was to take profit at 26,000. Okay, so that's what we've done, and this may even float a little bit lower. Maybe I've made a mistake in here. If I've made a mistake, it would be that this would be 1 and 2 and 3 and 4 and 5 here for the third wave, fourth, so that we could end up being a little bit further down at this point. So probably, but I'm okay with that. We'll just we just take the next logical step, and we also know too that in the bigger picture here, there was a couple of reasons for this here too. So just going back to the 4-hour chart, this was also the 61.8% retracement level through there. There was also this trend line coming through here as well. So there were 3 reasonable reasons to take that money off the table at that particular point. So even if it does come down here further, I'm not worried about it. We'll still catch it, because we'll just use our, if this, let's get some clean space here. The market will come down, just doing its little bounce off here. If it comes through here and goes back up and tests here, then our short trade will be here. If that's breached at that point, then we'll go, well, I've already mentioned it over here as well. So we'll build in short at that point there as well. So we'll just take our money off the table now, and we'll get back into that. So India, okay, so just on the 4-hour charts here, I'm not looking for a trade in this wave 4 area through here. So I'm looking for this market. We've got wave 3 up here on this high here. That's all a bit wild and woolly there. So what we're looking for in one way or another, wave 4s can be tricky little suckers, and we just need to be careful. So we're more interested in trading long. So we're expecting it to pull back to the wave 4 1 lesser degree here. So we're still a distance away from that here at the moment. And wave 4s, out of the 11 or 12 different types of corrections that Elliott can have in wave 4s here, triangles, expanded flats, double zigzags, and so on, it makes them really complicated. It's not like a wave 1 and 2, where wave 2 is a simple zigzag, like an A and a B and a C. So this one here just could pan out in any way. I mean, I've had it as an A, B, C to here. It looks like there's further downside for this to come here, but I'm not fussed. So there'll be a retest of the 12,000, and then once that retest, I'm not worried about the pattern, but what we can say is that the market's below the level, the closest largest number, so it may drop a bit lower, but it should go back and retest that and fail that, and then move down lower from that. But I don't know if this is the actual sequence for this particular pattern. I'm not going to pull it apart because I'm not going to trade it. So we will be interested in the bigger picture here, because in the bigger picture here, the classic trading levels pattern, if we can just bring that up here, is simply this here. So the arrival, the reaction, the first high above the level, and where we are now is in this structure here. So we're waiting for this structure to finish, and then we'll be looking to move in on the long side here. And if this is the 12,000 here, then we'll be on the long side here. So currently we're in this space here. So with that, we'll see the arrival, the reaction, the first high above the level, an A and a B and a C back to here, and then we push off from here. So we're not, to get our timing right, we trade to here, get out, we wait, and then we get back in over here. I mean, we did trade in here and so on a bit, but generally that's the rule. Okay, so thanks for tuning in. Thanks for your support. Appreciate it. Cheers.